When you get paid for your work, you put all of it into someone else's bank, and then you write checks from the account to buy the things of life. So someone else's bank gets all of your money. If you owned a banking system, wouldn't you want to run all of your business through your bank? If this is so, then life insurance premiums paid each year should ultimately equal your annual income. If this message is taught to succeeding generations, then a perpetual banking system can be achieved.
Welcome to the Bankless by Design podcast, where we rethink money, ditch the system, and rediscover what it means to truly thrive well. I'm Trisha Miller, mom of 7, financial coach, and founder of ThriveWell. Around here, we believe wealth is more than numbers. It's about freedom, stewardship, and building a legacy that lasts. If you're ready to challenge the norm and take back control of your financial life, you're in the right place. Jonathan, thank you so much for being here.
Thank you so much for having me. I'm really excited to be back.
Well, as we talked about, we are going to go on a journey together of learning by going through Nelson Nash's Becoming Your Own Banker. And Jonathan has already read through the book and has started to become his own banker with his own policy. So he's no stranger to the concept. Several months back, you had said something to me like, hey, it would be really fun if we went through this together and you could teach me a little bit more in depth. And I said, hey, why don't we do that on the podcast? And that way we can just do it and take other people along on the journey with us. So here we are. You ready to dive in?
I'm very excited. Honestly, I think it's going to be a good way not only to refresh myself and to learn more, because to your point that I know you've said, every time you address this book and come back to it, you find that you learn something new. I'm almost completed on my second time reading through the book. Definitely got interrupted at some point, but I have found that even on my second time going back to the book, there was things that I just understood better after having practiced what, the book teaches, at least just even for, 6 months and then coming back to the book.
Exactly. And that's the key right there. It's not that there's any magic in this book. It's just that when you begin the process, it is a totally different thing when you've paid a premium and you start actually using it. And then you go back and you read it again and you're like, that's how that works. Or you find something new. It's because you're downstream a little bit. So it's you that's really changing, but your mind is more open to, I think, catch things that they maybe don't catch in the beginning.
They always say hindsight's 20/20. So you always know something now that you didn't know previously.
Absolutely. So just as by way of a little bit of introduction, obviously Nelson Nash was the author of this book, Becoming Your Own Banker. We will be using the 5th edition, and I would highly recommend our listeners, if you don't already have a copy of the book, get yourself a copy. It's all of $20-some on Amazon, and listen along and get your pen out and your highlighter and take notes. This book is basically the Bible for the infinite banking concept. Think of it as like a handbook. So if you're going to actually become your own banker and be an honest one and do it well and understand what you're doing, and understanding what you're doing makes all the difference in the world, because then you know why you're doing what you're doing. And I encourage my clients to go through the book at least once a year because of the fact that you will grasp new things each time. So 5th edition, and one of the reasons the 5th edition is the latest printed edition that Nelson wrote, but also page 85, points to consider, was not in previous editions. And that is where we're going to actually begin. And it's actually not written by Nelson. So we're going to start at the back of the book, but it's a section written by his son-in-law, David Stearns. After having worked with Nelson for a long time, he went to him and said, hey, these same questions keep coming up. Why don't we address them? So he put this additional page, obviously with Nelson's full permission and agreement, and it actually addresses a lot of those questions in people's minds, or shall we say conventional thinking about finances and even just our mindset about money, that often become stumbling blocks, shall I say, to understanding the infinite banking concept. So by going to those first, it helps us get a little bit of that out of the way, very beginning. So let's get started. The title of it is called Points to Consider. So Jonathan, we're going to read right through these points and just talk about them. And we're kind of winging it here. So who knows where this will go, but let's give it a whirl. All right. I'm going to let you start with point number 1.
Right. Point number 1. There are only 2 sources of income, people at work and money at work. In the typical American family, through the first half of the 20th century, the father worked outside the home and the mother managed the home, nurturing the family and instilling spiritual values as the children matured. Now it is widely accepted that a family can't make it without both spouses working outside the home. It takes 2 incomes just to make ends meet. Could it be a fact that this modern family has no money at work?
That's a good question. What do you think about that?
You know, I was listening to a podcast that you recommended I listen to before this episode as a little bit of research, and it talks about this and they kind of address passive income. And a lot of us just automatically assume that passive income is like where we're not actually working for it. And they sort of address that oftentimes a lot of the things that we consider to be passive income actually do require work. So for example, owning real estate, you know, you're putting in the effort of buying the home. You actually had to work at some point to gain the value in order to go and buy said home. But then also, you know, the toilets, tenants, and whatever else it is that you have to deal with. Yeah, termites, whatever, that you have to deal with as a landlord or a real estate investor. There are things that are still requiring some form of work. And I had never really considered that because I still had the just generic mindset of, okay, passive income is anything that you're not actually actively being required to spend your hours at that present moment to turn it into value. But there is actually a distinction there. And having your money actually at work for you passively is very different than, for example, owning a business or being self-employed. Those are very different things. So that's something I had never really considered before. And now it just opened my mind to being like, well, do I have any money at work? And I do, because I have my life insurance policy, but that's probably the only money that outside of me actually expending and trading my time in order to, you know, make money. So it's very interesting to me that I had never really considered passive income in that way. And now it is making me realize that I need to have true money at work that does not require any work from me in exchange for it. And that's the real, you know, ideal piece de resistance, you know, so to speak. Obviously that real estate investing and these other forms of passive income are great. And we definitely want those, or, you know, what we call generic passive income, to use the same term. But they really just, you know, helped me understand that there was even a higher level that you really are aiming to achieve at this.
Well, and it's interesting. A lot of people used to call it mailbox money, right? You just get the rent check coming in and that's your passive income. And really it is a bit of a misnomer, because while you may get to a point where you have mailbox money coming in without a whole lot of work, I can attest, as having rehabbed and rented out some properties, there was a lot of upfront work. And it's almost like you put that work into it. And then, yes, it starts to generate an income over time, but it never means that it's something that is completely hands off. Even if I give it to a property manager to manage for me, now I got to manage the property manager. Are they doing their job the way I want them to, right? It's not as passive as people think. And that's not to say it's not great. It's a great investment, no doubt about it. But I think, to your point, that people at work or money at work is really the 2 possibilities. And generally speaking, most people only think about what they can do to trade their time for money. And the problem with that thinking is you only have so much time and so much effort.
I can really attest to that at the present moment with trying to get my side hustle to a point that it can replace my primary income. That involves me exchanging my hours for money. And there's only, to your point, so many hours in a day, which means when trying to work 2 jobs so that even that side hustle requires me exchanging my time, again, just like my normal day job does, that means I'm up till 2 a.m. trying to cram in whatever, and then getting up at 8 a.m. the next day, again, trying to do, you know, the same thing. And then So yes, absolutely. That is then the goal is even when we're, working and having some form of side income, is that taking out of your 24 hours a day?
Yeah, absolutely. And there are other investments that you can get into that will create an even more passive type of income than real estate, such as perhaps you're getting into dividend paying stocks, or perhaps you're doing oil and gas, or a syndication with real estate where you get to just put in the money and somebody else does all of the work and they're putting your dollars to work on your behalf. And all of that is great. But, a lot of times, like those syndications or the oil and gas, you have to be an accredited investor. So that makes it really hard because to be an accredited investor, you basically have to be, as a single person, I think the rules now are single making $200,000 a year, married it's more, or at least $1 million of net worth, I believe, without including your primary residence. So it assumes you've already got a really good start, right? So where does the person who's just starting out put their money to work if they can't do that? And even buying rental property, right? It's going to take, now, I will grant you, there are creative ways to buy real estate. I've done it myself with no money of my own. So that's not impossible. That is absolutely possible. I have done it.
And what did that require?
What's that?
What did that require from you?
Work. A lot of effort and a lot of relational capital.
Absolutely.
That was huge. But I will say that the beautiful thing about a dividend paying whole life insurance contract is that somebody can start out small and get their dollars to work in a very passive way. So as I was thinking about that, I was like, there are so many ways that you can do passive income, but there are very few ways that you can do it with very little to start and get those dollars going, or without a ton of work.
Now, to your point, that's actually something that really excited me, especially as at the time I was 23, now I'm 24, was that when I bought my first life insurance policy, that was the very first thing that I've ever done that actually increased my net worth.
There you go. Instantly.
And that I'm constantly recapturing that value and utilizing the actual functions of that policy. But, at face value, that is the first thing as a young, fresh out of college professional that I have been able to do feasibly to boost my net worth. That is not a liability. That is not, a car or whatever.
Without
so I
risk.
thought that was incredibly exciting.
Yeah.
And it's, to your point, attainable. Straight out of college, maybe I couldn't go buy the house immediately. And maybe if I had been creative or found ways, I'm sure I could have made it happen if I really wanted to. But as something that's right there, attainable, ready, and something that has so many other additional benefits, it's incredibly accessible as a young professional. So that's really exciting as well.
It's so much more powerful than people know. And let's go on with the rest of this paragraph here too, because there's a couple other things in here that I'd like to address. And this is this idea that the first half of the 20th century, the father worked outside the home and the mother managed the home. Now, obviously, we have typically now two working parents. I am certainly not against a woman who wants to go outside and work and working for myself. However, I will say that 50 years ago, that was optional. Now it's hardly optional. And that's the challenge, right? It's because of inflation, for one thing, our wages have not kept up with the rate of inflation, which we could get into why we have inflation, but printing money is just increasing our inflation at an exponential rate. But the other piece of this is really Parkinson's law. And there's even a Parkinson's law in the fact that once a family wanted to have both spouses working, that set the standard for what a family should expect to be able to afford. So now, and I can attest to this because when my kids were growing up, we would move into a neighborhood. We were a Navy family, so we were constantly moving every couple of years. we're either buying or renting a new house and we're moving into a neighborhood where there are double income, no kids living next to us. And we'd always say they are dinks. They got the nice cars. They got the pretty furniture in the house. They got the pretty house, all of that. And we were in this position with 7 children and 1 income. We called ourselves silks, single income, lots of kids. So it was the silks versus the dinks. And we had no way of keeping up. But boy, did we try. Like, it was really hard because it was almost embarrassing sometimes. You know, we couldn't do the things that our neighbors could do. And we were trying, and sometimes we'd feel that pressure. So guess what happened? Running up the credit cards because the neighbors are coming over and we don't want to have flea market furniture. But that's what happens, right? So when you've got 2 people working in a home and they are now setting new standard for living. And of course, you know, we can argue about the fact that we should have just not cared about it. And sometimes we didn't. I mean, I think we did a pretty good job of holding back as far as we could, for sure. You know, thus the Wendy's runs were very different than our neighbors, where we couldn't eat out in the same manner or whatever. We were with 1 vehicle. We didn't have 2. We made sacrifices. Absolutely. I don't regret any of those sacrifices. But I'm just saying that we were almost in a transitional phase when you kids were little, because there were still a lot of stay-at-home moms, but it was becoming more and more where both spouses were working. And I think that added to that Parkinson's law, where expenses will rise to meet income. So that's happening in 2 working person's household, but then the income's not rising over here for us. And so then you give up and you're like, well, I got to go to work, and things are growing more expensive too. But then we have bigger houses and we got more stuff to fill in those houses, right? Now we have storage facilities because now even our houses can't fit it all. Try to find yourself a, 1,200 square foot home these days that's new. They don't even build them, right? You have to go back to a house built in the 1950s to find a small starter home. So I'm just getting at this idea that what was once optional has become certainly a challenge to be optional anymore. But we could think different and get our money to work for us and make it possible again.
Yeah, absolutely. I think there's nothing wrong with wanting 2 spouses in the workforce, and most people do that. I think the unfortunate reality is that the opposite option feels less available, like to go back to being single income, a mom or a husband staying at home raising the kids does not feel as feasible for anybody, I think, anymore, which has, to your point, to do with a lot of different factors, the devaluation of our currency, the, inflation on top of that, as well as companies taking advantage of that too, with, where you have the whole shrinkflation thing where things are getting smaller yet more expensive. So I think that there's this compounding effect that really places a lot of fear on people. And I think part of the problem is all of us are so busy, where we're so dealing with the next thing constantly, especially mothers. I think that they deal with that more than anybody else, that we don't even have a moment to slow down and think, is there another option here? Is there a way that if this is what I want, can I go back to this? And I think now that we find ourselves in a situation where it's feasible, but it requires being more creative and thinking outside the box. And to your point, rethinking your thinking, what I think he's trying to get at here is that everybody feels like it's not an option anymore, that it is pretty much, this is the way that it is, when there are other options. It just requires you to be creative.
Well, and I agree with that. And honestly, we want to talk about cost versus value and values. I mean, there is no replacement for a mom or a dad who's able to spend time with their children, especially when they're young. And that is a sad reality. Sometimes I'm like, if your children are having to start in daycare, from 6 a.m. till 6 o'clock at night, from the time they're little at some point, we're not living. And to your point, we're on a rat race where we don't even stop and slow down enough to go, hey, wait a minute. What are we doing? Is there another way? And I do see a movement in this younger generation coming up behind me. I don't know if you see it, but where people are saying, you know what, we're going to go homestead.
Yeah. No, I mean, I think I'm one of those people, as is my fiance. You know, we really have started having those conversations about how do we want to raise a family? How do we want to live our lives? And then also, I know you and I have had those conversations where I think a big part of the problem is the fact that we're living in single individual families now. We're not living multi-generationally anymore, excuse me, where, you know, there used to be a built-in support system where you had grandma who was a built-in babysitter, and you had grandpa and grandma who were built-in teachers, and you had dad who's out, you know, sourcing the income, etc. You have mother taking care of the kids and taking care of the home. And even those roles can be easily reversed now. I mean, sure, 50 years ago, that's what the norm was. But in today's world, you could have those roles just as easily reversed, where the mother is out and is the breadwinner and the dad is at home taking care of the kids. But having those grandparents around where we, you know, had a built-in family support system, we just don't have that anymore. Other cultures still do. And I think that you can see that reflected, like, especially in the Asian cultures. But here in America, at least, we ditch our old people as soon as we can and we put them, you know, on a shelf. The reality is
they all move to Florida because they've got to go play golf.
Yeah.
There's that too, right? I've seen recently people talking about, where did we get this mindset that once you turn 18, that meant you had to go out on your own and do everything on your own. So now we all have to have our own mortgage and our own vehicles. And I mean, I get it. You got to have boundaries and all of that. But it's just, we have created a very challenging situation that doesn't allow us to live in relationship with one another.
This is a rabbit hole and a conversation topic that I think you can dig on for hours and hours. But I mean, you just look at it even culturally, it's just where we are as a culture and as a society here in America, is that we just don't even consider that anymore. You know, the thought of living multi-generationally. And to your point, yeah, like, it's how quick can I get this kid out of my house and, you know, providing for himself instead of, and, you know, and now even then you get the whole stigma of, oh, you lived at your mom's house until you were 23 or 24. And you allowed yourself to save up money and put yourself in a good financial position. How dare you?
Right.
Instead, you're just, if you look down upon, you know, you're living in your mom's basement, you must be sweaty and whatever, you know. And the reality is that we're forcing ourselves out of the nest incredibly early. And then we're putting ourselves in worse positions financially. And then either that person ends up coming back into the house when they're 35 because they found themselves in crippling debt, or they started out in a poor position because you forced yourself out of the house immediately and got the, you know, minimum wage job in an apartment that you shared with 4 other people. And it's just a completely different mindset because it's based on me and what can I do for me right now to make me happy. Maybe my parents have rules I didn't like. Maybe I want the house to myself so I can do X, Y, and Z. Ultimately is what our culture is kind of focused on. It's an individualized culture rather than a family
together
cooperative culture. We're not a cooperative culture anymore. We're very individualized. Yeah.
Right. So even if you have the 25-year-old, you know, living in mom's basement, the picture is that he's lazy and doing nothing to help either. Right.
And there certainly are those people. But,
yes.
you know.
Right. We're not talking about that. We're talking about like an intentional, we can help one another. We can come together and we can do something better. But I know we have gone a little bit far off in this topic, and this is probably going to be a little bit typical because you and I tend to do that.
Okay, it's going to be a 4-part series on this one page.
We've gotten through one point, maybe. Yeah, but so let's just wrap this up, because what I'm trying to get at here too is that by putting money to work, finding ways to put your money to work so that it doesn't have to be just you trading your time for money. You could actually find a different way to live your life in a more relational manner than we are doing today in this rat race. So,
well, we've talked numerously about the importance of intention. And so that's kind of what that boils down to, I think.
Yeah. And actually the moment I said rat race, all I could think about was the game, Robert Kiyosaki's game, Cash Flow, getting out of the rat race. That is an excellent educational tool. Get a hold of that game and play it. And you'd be amazed at what you can learn from that about how you can put your money to work and get out of the rat race. So the only thing it doesn't include is infinite banking, and infinite banking could be the foundation for everything else that you could do in that game. All right, let's move on to point number 2.
Point number 2. If you knew at passive income time that you would be getting back everything that you paid into a system tax-free, would you object to putting more money in it? I don't think you have to expand very much on this. I think that that's kind of a no-brainer, as they say.
Well, let me just say this, because it is interesting that people don't think twice about putting money in their mutual funds or IRAs or 401ks where they don't get all of their money back out tax-free. In fact, I don't know that there's many places that you can put your money where you don't have to pay taxes on it. The other piece of this is that I have heard people say whole life insurance is a scam and it always costs. It's never a benefit to the insured or the owner. And I always think, what policy are you looking at? Because with a dividend paying whole life insurance contract, you're going to get every penny and more exponentially, depending on how long you hold it, right? Tax free. So I think we could leave that one there unless you have anything else.
No, I think that's good. Moving on to point 3.
Okay.
When you get paid for your work, you put all of it into someone else's bank, and then you write checks from the account to buy the things of life. So someone else's bank gets all of your money. If you owned a banking system, wouldn't you want to run all of your business through your bank? If this is so, then life insurance premiums paid each year should ultimately equal your annual income. This can't be done immediately, and it will take the average person about 20 years to reach this level. If this message is taught to succeeding generations, then a perpetual banking system can be achieved.
Well, there's so much there. Okay, so you're already putting your money into somebody else's bank. You're already putting how much of your money in somebody else's bank before you started this?
All of it.
All of it. And we don't even think about it. So the bank is getting access to all of your dollars and it's making them rich. And they are paying their profits to their stockholders, not you. They give you pittance for the use of your money. So this idea Nelson's saying is just, we're just going to take our banking process, right? Making deposits, withdrawals, borrowing, depositing, lending, all of that constitutes the function of banking to a system that we own and control. So we're building our own banking business. And I think that's a really key, important way to think about this. You're starting your own banking business when you do this. So there's going to be a capitalization phase. It's going to have a little bit of time for it to build before you can fully do this. In fact, he says 20 years to reach this level. But the idea here is just the same. If now suddenly you own the banking business, how much money do you want to go into your bank so that you can now be the one profiting, because now you are a mutual owner with the life insurance company. So they're going to pay you the dividend off of your money instead of it going to the stockholder at the bank. So this is where people get confused that this is some kind of investment. It's not an investment. It's not about a rate of return. It's about where are you parking your dollars in a business that you own and control or somebody else owns and controls, in a place that you can make the profit off of it or a place where somebody else is going to profit off of it. It's that simple. And I often think of it because my parents, I grew up in the restaurant business and they owned their own business. Where did we eat? Naturally. We weren't going out to eat very often at anybody else's restaurant. We were always eating at our restaurant. Why would we go somewhere else? Now, the mistake we made was we didn't pay for our food. And we'll get into that with Nelson's grocery store example.
Stealing the peas.
Yes, we were stealing the peas for sure.
I think a big part of this point And I don't want to go full tinfoil hat conspiracy theorist. And that's not what I'm trying to do by explaining it in this way. But if you've ever seen the movie They Live, and I know you've not, Mom, but for those listening, I'm sure have, you need to put on your glasses sometimes and try and look at things a little bit differently and kind of just from a different point of view. And again, this goes back to the rethink your thinking and to the point that I brought up earlier, maybe a little bit preemptively about it's hard sometimes to admit when we were wrong, and not even when we were wrong, but just when we didn't know something. I love the example that you've explained before about how you just don't know how much you don't know. And then the more that you do know, the more you realize how much you don't know as well. But what I'm trying to get at is that sometimes we just have to really step back and look at things in a very 1 + 1 = 2 plain mannered way. And I think our monkey brains do a very good job of forcing us into our rat race mode to where we just kind of buy into the game and the world we live in, and we just accept it as mere fact, as it's just, this is the way it is. It has never been different. And this is just reality. You must accept it. So I think that there's kind of this, at least for me as a young child, you kind of have this thought process that like banks are just for the general good of all people. They're just there for your benefit. It's like a perk of the government, like this is just provided for you.
Public service.
Public service, exactly. But in reality, it's, at least the grand majority of them, are for-profit businesses. And I don't think many people take a step back to actually consider that. Now, granted, there are member-owned credit unions and things like that, sure. But Chase Bank, Capital One, Wells Fargo, these big banks, they're for-profit businesses. They have stakeholders. They have shareholders. They have a board of directors that get paid buku bucks. They are, as I get to the point, a for-profit business. So I think sometimes when you actually take a step back and start to consider it like that, I'm fine with somebody doing a service and me paying them for that service. I appreciate that. But I want to do fair, good business with somebody that I'm doing business with. And I think we don't actively consider banking as doing business with said bank that you're choosing to do business with. And the reality is that banking is not necessarily the big giant bank on the corner. Banking is just a matter of storing wealth, protecting it, and distributing it. You do banking in all sorts of different ways constantly. And I think that there's this disassociation and misassociation that banking is the bank at the corner and that's the end all be all. And the reality is that, yeah, you got the guy down the street who stores all of his cash in his mattress and guess what? He's banking. So I think sometimes we have to take a step back and consider it. What are we actually doing here in this moment? And am I okay with this transaction? Am I okay with what I'm giving and what I'm getting back for it? Because the reality is that we're using somebody else's bank and we're contributing to somebody else's business. They make the rules. They decide when and where you can access your capital. Yeah, okay, you gave them $10,000 and you expect to have access to that $10,000. To break it to you, that money, first off, is not actually there. It's being invested in because of fractional reserve banking. Right. It's out actively being used by that bank to make more profit for its shareholders. It is not being used for your benefit. Now, granted, you're getting 0.01% interest or whatever because you chose to bank with this bank.
And then pay.
But I think and I think that that's sometimes just kind of what we have to do is really just kind of step back and think about it and go, is there a way for me to control this aspect of my life?
Right.
And I don't think anybody ever really takes a step to actually consider that because we just kind of take banking as we know it in the modern sense of the word as gospel. Like, this is just what it is. Like, this is the only option. This is it. You have a bank and you better be good friends with them because you want access to money. Wouldn't you much rather own your own bank, proverbially bank, and make your own rules and choose when you get to access your money, how you pay it back, what the terms are, and then also the thought of you're human and life happens. And I hate to break to you, but when you're actually working with another business, another bank, when payday comes, due date comes, they expect their check. They're not going to say, oh, life happens. That's okay. We'll get you next month. But when you make the bank and, hey, you've got X, Y, and Z going on this month, you're allowed to be a human. And I think that's a huge thing that we just don't ever consider. So sorry for rambling on that point, but I do think that that's just
You're
something that we really
absolutely.
need to consider.
Yeah, it's like the saying, the fish are the last to recognize the water. We've just grown up in it. We don't even think about the fact that it's even possible to control our own banking function. I will never forget the first time I heard James Nethery talking about controlling the banking function. And those words literally sounded Greek to me. It's like, what in the world does that even mean? And the idea of control. We don't consider how important control of our own dollars is. You know, he who owns the gold makes the rules. And you don't realize how important control is until you're out of control and you have a crisis and you can't access money when you need it. Or, I mean, as simple a thing as how long the bank takes sometimes to actually give me access to the money on a check that I have deposited. I mean, I have literally taken a certified check from one bank across the street, walked it over to another bank. I had a checking account at each, and I still couldn't get that money for I don't know how many days. And I'm like, wait a minute. And it didn't matter. It was certified. Didn't matter. They were holding it because of how much it was. And that's a small piece, right? Now talk to a real estate investor who's trying to make a deal go through and he can't. Or you're in a government shutdown and you can't pay your mortgage because your money's locked up in a K and you can't touch it without penalties and taxes. You're not really in control. It's when you're in the crisis, I think, that this really kind of comes home. But as far as actually controlling the banking function, that's just not something we even think about. But this idea of ultimately your life insurance premium equaling your annual income is huge. I mean, in the beginning, that's like mind blowing. Like, how can you do that? But you do. You put it into your own bank account now. So what we're talking about here is high premium. And I have to quote this. And I'm probably going to butcher it a little bit. So forgive me, Ryan Griggs, in his book, How to Buy Whole Life. He says, we don't just wake up one day and decide, you know what, today I think I'm just going to start paying really high premium for life insurance. That cracked me up when I read that the first time. And I still like, cause you don't know, we don't, right? We're like, pay high premium. Why would we do that? Well, because that premium is money that is going into a warehouse where you can control it. You can have access to it. And so high premium, well, at some point that means 100% of your income, maybe 20 years down the road, though. We're going to start in a reasonable place where we can learn the process, get the sense of it. I was working with some clients yesterday. And we had to kind of come back down to a little bit of reality, not hit it quite so aggressive because they need to practice this. They need to figure this out. Once they do, they grow confident with it and they start to see this is a very different thing. Then usually you're going to get the call. Hey, I want to be able to put more money in this.
Funny you say that because I'm pretty sure one of the very first things I ended up asking you was, how do I get to the point that all of my money goes through this? And then that's when you exposed me to the idea of, premium is the solution and that, the goal is really to have as much premium as possible because then you're recapturing all of that interest and all of that value as well as still having access to it.
It's like, how many dollars of your own do you want working for you?
Yeah, absolutely.
As many as possible. But there are limits. We're working with life insurance companies. There are limits to how much insurance they'll give you. Nelson says this is about a system of policies. You're going to have to get more bodies than just your own insured in order to really get to this place where 100% of your income can go in, but it can.
I think the issue with the majority of Americans is that everybody wants a get rich quick scheme. I mean, look at how many people play the lottery, for example. And I don't think that when people read something like this where they go 20 years, it's because we have, again, a short-term thinking issue, which is a big thing that the infinite banking concept addresses, is thinking long-term and shifting from a very me, what am I eating tomorrow? What am I doing this weekend mindset to what are my kids going to be doing in 10 years? What will my grandkids be doing in 25? What will my great grandkids be doing in 60 years? And shifting that mindset.
You're absolutely right. It's thinking generationally. I mean, that is just not something that we typically do today. And part of that, go right back to, we're in the rat race. Who has time to slow down and think about our great grandchildren?
Yeah. Oh, my point. Sorry, I just remembered what I was trying to say. So even hearing that, at some point we have to grow up and kind of recognize that something is going to require some work and some effort if we do actually want to achieve this or whatever it might be that you have in this dream and vision of yours for your life. But the reality is that somebody has to pick up the torch. So in my life, I'm fortunate that it was you and that you chose to start all of this for our family. And then I'm then fortunate enough that I'm able to start this at 24 going on 25. And so I've been able to start at a young enough age that, okay, 20 years from now, okay, I'll be 44. That's a very reasonable age to be controlling the entire banking function of my life and to have the capital access available to fund anything that I might need, whether it's a real estate investment or whatever might come my way. That reality for me is incredibly exciting. So I think that, okay, say you're somebody that's listening to this and you're 65 with kids and grandkids, you might not experience that immediate, my entire life function is now going to be taken over. But hey, maybe by the time that you're, 80 or even before that, honestly, depending on how you set it up, you might be able to experience a good portion of that, but your kids will be in that place that they could get there or their grandkids. And so I think the idea, again, with this whole truly generational system is that it just takes one to start and I'll get to experience it at a younger age. My children will experience it at a younger age. And then, it should kind of just be a perpetual point to where kids are 18 and they're already able to fund their first car or whatever. And I think that that's incredibly exciting.
I love hearing you talk about this. Like, this is just, I'm so proud of you for one thing, but just to hear it, because I am so thrilled to get to be the one to just start. I know that my life is going to have an impact on yours and your children, and you're going to teach this going forward. And, my hope and prayer is to have it go along with our values as a family as well, so that my grandchildren aren't faced with, oh my goodness, we have to have two of us working and we can barely eat. I want us to be able to get to a place where my grandchildren aren't in that place, where one of the parents can stay home with their children and care for them. That we are not only able to flourish down the generations better for themselves, but then are also able to go out and help others. Like just that, what you described is just this waterfall effect of it just getting better and better with every generation. And of course, that has to be infused with the values and the education that go along with it. We do not want trust fund babies, right? That has this really negative connotation. So it does take work and it does take discipline. But one of the interesting things about teaching the infinite banking concept to your children too, is that there is kind of a built-in discipline that is required in order for this to be successful. So that's really helpful. And we'll get into that when Nelson teaches about the human behaviors. And it's not going to be the life insurance company that's the problem. It's going to be the people problem if we don't, follow that discipline a little bit. So yes, long range thinking, diligence, discipline, all of those things are part of this. And this was really fun having this conversation with you. I think we got through point number 3, but just to wrap this up here, we will continue with point number 4 next time. And I know that we're going to have some incredibly fun conversations as we go along the way. Hopefully our listeners found this enjoyable. And Jonathan, thank you so much for being here with me and being willing to walk through this together. And I look forward to what we can do in future episodes. So thank you so much for listening. And until next time, I hope you have a great week and get yourself a copy of the book. And we will be back here next week, starting on page 85 on point number 4. Thanks for tuning in to the Bankless by Design podcast. where we're done with the system and we're doing money differently. Be sure to subscribe, share this episode with someone who needs it, and visit us at banklessbydesign.com to learn how you can start living bankless by design.